the StockManor.com studios here in the Black Hills of South Dakota. I'm your StockManor, Brian Johnson. And gonna do, I know, lo and behold, a little daily update for you guys. I've been crazy busy coming into the fall and just have not had the time I normally do to commit to these videos. Hopefully we can start to get back on track slowly but surely over the next few weeks. Okay, looking at the charts here, you can see, at least over the last day, what we've done is gone into a consolidation. It's been a while since I've done a video, so let's start back here a little bit. And, for the last at least week, big move to the upside. Any of you that have been following me for a while know that I've had a couple of different counts on the Elliott wave side. Been very, well, more or less bearish for good reason all the way down until about now. Over the last couple days, things have started to change, sentiment starting to change. I've definitely started to move more into a bullish type of, bias, I would say. I really would like to see first a pullback, and then I think we've got some really good trading on our hands in and through Christmas. It's kind of a scenario I laid out quite a while back for my newsletter subscribers. By the way, I just did a recap of that and updated it this last weekend. So if you guys like Elliott Wave and maybe you've been thinking about the newsletter, now's the time to do it. If you sign up, check out Sunday's video. At the end of Sunday's video, I went into where I think where the bull count is at, where the bear count is at, where I think we're at, what I'm watching to take my positions going forward. And so the Sunday video wrapped all that up. And if you guys enjoy these videos, if you like them, remember that the subscriber video comes out every day except for Saturday. So if you enjoy these daily updates for like $1 a day is basically about what it works out to. You can get these daily updates, give yourself not only some direction in the markets, but also I look at gold. We look at individual stocks. Every week I have new stock plays on, and we're always looking at something new. So give you guys an opportunity to not only trade the indices, but trade stocks as well when the indices aren't moving, such as today. And I cover Apple in every single week, so I'm always covering Apple because it's one I like to trade. We just got into that one again this week above 385, and that's panning out really well for us so far. So anyway, newsletter's a great deal, $1 a day. Try it out. No commitment for 6 months or anything. Try it out for a month. If it doesn't work for you, it doesn't work for you, but at least you can give it a whirl and catch up on where we're at. Check out Sunday's video if you do sign up. I think you'll really like it, especially if you're into the Elliott wave stuff. All right, so back to the markets here. We're moving sideways, especially over the last day. When these little candles are barely discernible as to which one's which, you know you're into a lot of chop, and that's what we saw today. Basically a 12-point move or so, maybe 100, not even 100 points on the Dow today. Very, very, very sluggish sideways motion. It's just a consolidation. If you've been with me for any length of time, you know that I do a lot of up, back, sideways, up, back. That's the way the movements have been. I'd say going back to about 6 months ago, a year ago, until we had the big drop lately in the markets. It was up, sideways, up, sideways type movement. Very slow, very sluggish. We're kind of starting to roll back into that type of scenario again within the markets themselves. Very indicative by what we saw today. So we are ready. We're a little bit overextended here. We're certainly due for a pullback. This thing can go up for another 2, 3, 4 days, rest of the week. But I'm telling you, we are due for a pullback. I'm only looking at it as a pullback. No, I do not think we're going to go back down and revisit these lows back down here. Not at this point. I certainly do not have that on my charts. I do think we're going to pull back for a while, maybe even high base, and then proceed to the upside. So we'll wait for that pullback, start looking for some really good movement within the stocks themselves and see if we can't get in on this train coming in and through Christmas. Here it is on a daily. You can see very extended, but above the 50-day moving average, not once but twice. That's good. Both closes, so the next overhead area to watch is 11,550. If you want something to maybe trade tomorrow, I'm looking at 11,450, 11 to the long side, 11,350 to the short side. If we go up more, I'm going to warn you, I would not recommend holding overnight on any kind of indice-based trade. That's an ETF. I don't care if it's a TNA, TZA, even the FAS, FAZ, those type things. I don't think I'd be holding them overnight. We are getting a little bit extended in here, and I would want to take them day by day so that you don't wake up one morning and go, oh no, really? we've all had those moments. I just would caution you against holding overnight on anything to the long side for the time being. We are due for a pullback. Would like to see that fall back into the moving averages, at least that far, and then take it from there. All right, moving on to the NASDAQ, 60-minute, same scenario, push up and above, getting flat this area here. 22.25 was my area to get long, but we gapped up and over it, so we were not able to catch that to the long side. But you can see the NASDAQ doing extremely well. Pushing up and into overhead resistance at 2300, looking for moves below 29 or 2290 and above 23 coming into tomorrow. As you can see, this is a very, very tight consolidation. We might end up even seeing another day or even two of this sideways chop where we really don't move much more than about, let's say on the NASDAQ, 20 points one way or the other. S&P, 20 points one way or the other. Dow, 150 points one way or the other. Something to that effect. But as it consolidates, I still have to tip my hat to the bulls until otherwise proven. Back below 2290 or 2280, okay, then maybe we're going to have a pullback. But until then, you just can't count on this being the top. Don't get caught in that. Don't get caught in, I'm going to go short because this is up too far. There is no such thing as up too far. Erase that from your brains. NASDAQ daily, same thing, up and above the 200-day moving average. This has been quite a jaunt for the NASDAQ. 2042 to 2294. That is a heck of a move. Now closing above the 200-day moving average. I like to give the bears a day to see if they can get it back down and below and close below the 200-day. But for right now, very, very strong. Next overhead, 2325 on the NASDAQ. From a weekly perspective, we have cleared these moving averages. We'll wait and see what this looks like later on in the week. SPX 60, tight, tight, and more tight consolidation. 1190 to 1200. This is the area to be watching coming into tomorrow. And we'll see if we can't glean something from this in the morning. Otherwise, as long as it stays sideways, this actually looks like a 1, 2, 3, 4, 5 for you LAticians to the upside. I don't really like the 4-wave. It's a little shallow for my liking, but it is what it is, whatever. Just looking at the consolidation, I still like it above 1200, but not overnight if it continues upwards. I like it below 1190, 1185. I have to watch these moving averages as well as they move up and into that area coming into tomorrow's trading. From a daily, you can see the small little doji candle we were left with at the end of the day. This means nothing right now. It's just a candle sitting in the middle of nowhere. I know a lot of people are going to look at this as a reversal candle. It is not a reversal candle. It's just hanging out up there, waiting for tomorrow's candle to give us the direction overall. So you can see, once again, back above the 20 and the 50, not one but two closes. That's very good for the bulls. On any kind of a pullback, it's this 1175, 1165 you want to be watching very closely. Breaks up and over 1220, I think kind of game on for the bulls at that point. Once again, be very cautious if it happened all at once, unless we can consolidate for a couple of days. So maybe we get that up, sideways, up again. I'm okay with that. But up, and then up, and then up, and then no sideways, and then up again. Yeah, not so good with that. Let's give it time to rest, give it time to breathe, come back to earth a little bit. Once again, not saying don't go long. And I'm not even saying don't go long certain stocks, okay? Stocks can behave completely different than what the indices do. Just because the Dow drops or the NASDAQ drops doesn't mean things like Apple are going to drop, Baidu are going to drop. That doesn't mean anything necessarily to them. But if the indices are overextended, it does mean you need to use a little bit of caution in your trading if you're playing, once again, any ETF associated with the indices themselves. The VIX coming down sideways. Notice, though, we're still stuck in the same levels. I'm still waiting for breaks below 30 to really start to increase my sentiment to the bullish side. And from a weekly perspective, same thing. It's all about the 30 mark back here. That'll also mark about the 20-week moving average. Lots of long, sustained, elevated levels of somewhat fear here in the markets. Has not been subsided yet. Breaks back below 30, start to get me more in that bullish mood and start to kind of confirm more of what we're talking about when it comes to the bounce into Christmas. That would be for you LAticians in my book, Roman numeral 2, if that makes any sense. All right, FAS 60-minute. I like this thing back up and over $12 coming into tomorrow, really about 12.10. I wanted to clear this 200 period moving average, but I'm telling you once again, I don't think I'd be holding it overnight. You're looking for a day trade. Maybe you get 5 cents, maybe you get 50 cents. I don't know, but I'm telling you not to get too attached to it once you're in it. Make sure you're moving stops up and taking profits at the end of a day, because I just wouldn't want to be holding overnight. It's just not worth it. Even if it goes up tomorrow and then gaps up the following day, for me, I really don't care. It's all about managing risk, and that would be a little bit too risky for me. FAS daily, same type of concept. We are back above the 20-day moving average, but I'd like it back above 12, 12.10 before you start looking at a trade in FAS to the long side. FAZ then, on the flip side, back below 54 will be your mark to the short side, back above 58 to the long side at this point. That's going to stand pretty firm on both the daily and the 60-minute charts that we're looking at for your entries. That'll do it for today. Once again, I have a trading room, very useful for people that have time to trade during the course of a day. We go through, we trade the futures quite a bit actually. So if you're a big futures trader, I think you'd really enjoy that room. We've been doing extremely well. Very happy with how it's gone so far. Looking at the stocks, we're trading quite a few stocks as well. And like I said, of course, the newsletter. $1 a day is basically what it works out to. Plus, I still have the mentoring. For those of you that are ready to take your trading to the next level, this is where the rubber really meets the road, is within the mentoring course. It allows you to work one-on-one with me. There's no videos to watch. It's just you and I working through a lot of information that I have. It's a bunch of slides that we go through. So get ready to go back to college, pen and paper handy, because you're going to be taking tons of notes, and it's just you and me working one-on-one on the basics of the market, what to look for, identifying psychology in the markets, just anything and everything you would really need to know about trading is covered. And so it's for those people that are ready for that next step. You guys are tired of not being able to put all the missing puzzle pieces together. Maybe you're really close and you just can't seem to get over the hump. That's what the mentoring's for. Contact me about it, write me about it, ask me questions about it, call me. I have no problems any time of day or night talking about the mentoring courses or any of my other products that I offer. I'm really pretty available to people. I try to do my best. All right, guys. I'll be back with you again. I'm really honest. I'm going to try for a video on Thursday as well to see if we can do a little bit more of a wrap-up on where we're at. And we'll see what the next 2 days bring for us. Mark the levels I've given you in your charts. Hold on to them and be watching where we go over the next few days. Right now, it looks like on a 60-minute, we're very close to a 1, 2, 3, 4, 5 type of move up, and that usually constitutes a pullback of some sort. If we're not quite to the top of that move yet, we've got room. We can go up a couple more days at least and still kind of, or at least wander our way sideways. That could be actually very good for the bulls if we just went sideways here. So keep those levels marked in your charts, and I'll be back with you again hopefully later on this week. Bye.